Hello investors and future investors, welcome to the channel. In today's video, we will go through the trade of the week and I will show you how to use it to make consistent income. So if you're new to the channel, thanks for stopping by. On this channel, we help you with option strategies that can give you consistent revenue and everything related to finance and investments. And yes, you too can make money from your living room with options trading, and I'll show you how. And all I ask in return for this free content is that early thumbs up by you hitting the like button, and consider subscribing for more ways to win with options. Welcome to Investment Gains. Let's jump right into it. So for today's trade of the week will involve the Pmcc option strategy. Now, if you're not familiar with the Pmcc option strategy, I will link a video above. Now, for today's video, we're going to be working backwards, meaning instead of going out and purchasing the leaps, we're first going to see what the options are for the sell call, and then we're going to decide if it's worth us buying a leaps option. Now, it's like I always say, you could look at hundreds of YouTube videos, you could read hundreds of books on options, but the only proven way to learn option is to get down and dirty. That being said, let's jump into our stock for today, which is going to be Palantir, ticker PLTR. Okay, so here we are on Palantir options, and firstly we're going to go into trade Palantir options in order for us to open up the Palantir options chain. Now, like I said, we're going to be working backwards today, so we're going to see what premiums are being paid for the sell calls. So we're going to go over to sell and call, and we're going to choose our expiration date of November 12th. Now we're going to start with the share price, and we're going to look at the options above the share price to see which one gives us the best premium. So right here you can see the strike prices and most importantly your chance of profitability. Now, as you all know, we like a chance of profitability of 75% or higher. So I would go with the one with the $28 strike price, and for that we have a chance of profitability of 78.92 or 79% chance of profitability. Now, with that chance of profitability, you get paid 0.62 cents or $62. As you well know, each option contract is multiplied by 100 shares. Now we see that Palantir is paying very good premiums. Now we need to decide if we want to go ahead and purchase the leaps in Palantir. So what we're going to do now, we're going to go ahead to buy and call, and now we're going to choose our expiration date way out. Let's go to January 2023 so we can see the options that they're offering. Okay, so here are the list of the leaps or the long calls on Palantir, and the $20 really jumps out at me. Now, for the $20, in order for us to purchase this leap, it's going to cost us 9.15 or 915. Now, it does look attractive on the surface, but why would I go ahead and purchase this? Well, to answer that question, we're going to need to jump into the Greeks. So let's go ahead and open that up, and there we have it. So your delta, most importantly, is above 0.75, meaning any movement in this share price is going to result in $75 increase or decrease in your option. The implied volatility is pretty decent at 57%, and also the volume to open interest is superb. This is what you want to see, a low volume with a very high open interest. Means there's a lot of people trading hands on this contract. So let's go ahead and get into it. So we're going to go ahead and we're going to click into it. We're going to hit continue. Now, as you know, this is a leaps option strategy, which is called long-term equity anticipation contract. However, it does not say leaps whenever you try to purchase this. It will say long call. So if you do see long call, you still are on the right track. So we're going to go ahead, we're going to choose the amount of contracts we want, which is 1, and there you have it. So in order for me to enter into this leaps option contract, I'm going to have to pay $915. Now, $915 works out perfect for people that are trading with small accounts. It does not get any better than that. So now you've added this leaps option into your contract. How are you going to use it to generate consistent revenue? So let's take a step back right now. Okay, so here we are back on the Palantir options chain, and now that we've added the leaps option into our portfolio, now we're going to go ahead right away and we're going to start selling covered calls in order to make consistent revenue. Now, with selling covered calls against your leaps option, what you want to do, you want to make sure it says sell and call, and most importantly, you want to choose the closest strike date to you. The reason why you want to choose the closest strike date is because you're selling options and time/theta is on your side. If you don't know what theta is, I will link a video to the top. Now, the second most important thing, now that you're selling covered calls, what you want to do, you want to go ahead and choose your strike price above the current share price. Now, as you can see, the current share price is going to be around $26. So like we said previously, we're going to stick with the $28 strike price. And the reason for that is because it gives us a high chance of profitability of almost 79%. And also it pays us 62 cents or $62. 62 cents multiplied by 100 shares. So we're going to go ahead, we're going to click into it, we're going to hit continue. We're going to choose the amount of contracts we want, which is 1, and there you have it. So right away, once you do this strategy, you're going to receive $62 into your buying power. That money is yours to keep no matter how this trade goes. So how do you win this trade? Well, in order for you to win this trade on expiration date of November 12th, you ideally want Palantir to be trading at $28 or below. Once that happens, then you keep your minimum credit and you get to do this trade again for the following week. Now, the other way this trade could go is if, again, on the expiration date of November 12th, Palantir is trading at $28 and above. Well, once again, you keep that minimum credit. Like I said, that is yours no matter what. But now you're forced to sell 100 shares for whatever the price is going to be. Now, how do you cover this? If the price goes to above $28, then you have a couple options. If you do have enough buying power, Robinhood is just going to do the difference and you maintain your leaps option. If you don't have enough buying power, what has happened in my experience is that Robinhood sold off my leaps and gave me the difference back into my buying power. So the strategy is risky. However, once you have the money in your portfolio, you do not have to worry. So here comes the big question. Why is this the trade of the week? Well, this is the trade of the week because of your return on investment. By spending $915 to purchase a leaps option and then going ahead and sell weekly covered calls, and you get a premium around, let's say $62. Let's say it even goes down to $50. You will be making a return on your investment of much more than 3%. Now, in my good books, that is an awesome trade. The other reason why this is the trade of the week is because of the low barrier to entry. It only costs you $915 in order to enter into this trade. So it makes it perfect for people that are trading with small accounts. Now, we have lots more strategies like this on this channel. So if you want to join the weekly income team, like and subscribe right now. Also, feel free to share this video with anyone out there you think that can benefit from its content. And most importantly, thank you, and remember, always keep pushing your investments.